Ali, let me know when to start.
Good.
Okay. Assalamu alaikum and good afternoon, everyone. Thank you for joining us today to learn about your, or should I say our financial journey and how to secure our financial future through planning. Before we get started, I wanted to briefly go over as to what is Finance 101. Finance 101 is the first step you can take to really become self-sufficient with your money. This includes various areas like understanding expenses, how to create a budget, saving for retirement, investing basics, and more. Many of these concepts may appear difficult to manage or that you must be highly educated to do so on your own. But you can, anyone can, teach themselves to succeed with money. You don't need to be an expert to manage your finances, and you can have little to no previous background, but still improve your financial health. Today, we are grateful to have Ms. Riha, who will share some of the steps to teach us as how we can apply this to our own personal finances. A little bit about Ms. Riha is providing support as an associate wealth advisor to the partners at Arch Global Advisors. Mrs. Riha completed her bachelor's degree with honors from Duke University with a major in neuroscience and minor in chemistry. In addition, Paris has received a certificate from Harvard Business School online, completing courses in financial accounting, economics for managers, and business analytics. Prior to joining Arch Global Advisors, Mrs. Riha worked at AXA Advisors as a financial consultant. Mrs. Riha is an investment advisor representative and holds the following licenses: General Securities Representative Registration Series 7, Uniformed Combined State Law Examination Registration Series 66, and a New York State Life Accident and Health Insurance License. Paris was born and raised in New York City and is bilingual in Spanish. She loves to travel the world and considers Argentina a second home after living there for 5 years. Paris is a fan of the Rangers, Cowboys, and River Plate, and also enjoys golf and tennis. She's also an active member in the community as a member of the Duke Alumni Admissions Advisory Committee. Thank you for joining us today, Paris, and we are grateful for you to spend time with us and look forward to learning from you.
Hi, everyone. Good afternoon. Thank you for joining me as we begin the first of 3 seminars focused on your financial journey. Today, we're going to take a deeper dive into how to secure your financial future through planning. Before we begin, I'd like to take a minute to thank APNA Women's Alliance, the Alliance organization, and Nazia Hussein for having us sponsor this event. My colleague Shiraz Iftikhar is also joining us today. It's great to have an opportunity to be here with you and share some information on our firm, what we do, and most importantly, how we can help you. To give some background, Arch Global Advisors has been working with APNA and their subchapter for the last 14 years. We've also been working with physicians for over 15 years and have almost 60% of our clients work in the healthcare industry. That being said, we've had a lot of experience working with the problems physicians have in financial planning and providing them with the right solutions. I know Nazia gave a great introduction, but let me tell you a little bit about myself. My name is Riha. I'm one of the associate wealth advisors here at Arch Global Advisors. However, I do come from a slightly different background. I'm not a physician, as many of you might be, but I do come from a background in medicine. I studied neuroscience and chemistry with honors at Duke University and continued all the way up until about halfway through medical school. During my time in school and working in hospitals, I saw a big gap that needed to be filled, which was that women in medicine needed help planning out their finances. Not only did I see this gap, I actually lived it. I myself was completely lost in terms of finances. I didn't know where I stood financially, and I didn't know where I stood in terms of retirement. This is one of the reasons I decided to change and pursue a career in finance in hopes to help other women in medicine have a better understanding and take control of their financial situation. I understand how much work goes into being a physician and how little time you have. It's my hope that I can take some pressure off by helping you financially. Who we are? Arch Global Advisors is a registered investment advisory firm. We're based in New York City, although we have clients all throughout the United States. But I believe it's our approach that makes us stand out. We pride ourselves on being accessible, and we combine the intimacy of a small firm with all of the products and services of any other larger firm. We believe that working together with top attorneys and CPAs, we deliver seamlessly integrated financial services and give clients a true holistic approach to their financial goals. Last but not least, we have a disciplined investment process, meaning that we keep our emotions out of each decision that we make. At Arch Global Advisors, our mission is clear. We want to be the most trusted guardian of our clients' wealth through life's journey, as we provide meaningful solutions that make a difference throughout generations. Our vision is to bring renewed awareness to sound financial planning practices and to empower the communities that we live in by creating shared value. Now that you know a little bit about both myself and our company, I want to get back to the reason I'm here today, and that is to talk to you about women in finance, your financial journey, how you can secure your financial future through planning, and most importantly, how Arch Global Advisors can help you. In general, women tend to control a lot, and by a lot, I mean 90% of their family's spending and purchasing, which I'm sure that you all can agree with me on. But what you might not know is that we also control a large portion of our nation's wealth, around $14 trillion worth. That's 60% of wealth and more than 50% of all stocks. We also save more than men, whether it be in our retirement accounts at work or our individual accounts. Did you also know that when we do invest and save, women actually earn higher returns compared to men? Women outperform men by 40 basis points, or 0.4%. It makes sense, as women are seen to think more rationally about investing and tend to be more risk averse. So it's natural to ask, why do women invest less? Because even though women are risk averse, and that can lead to greater returns, women have over 70% of their assets sitting in cash, earning little to nothing. Unfortunately, that has a lot to do with lack of confidence and how comfortable a majority of women are with managing investments. 52% of women felt confident in managing investments compared to 68% of men. 59% of women felt confident in saving for retirement compared to 78% of men. And 42% of women are comfortable with their current investment strategy compared to 65% of men. As you can see in these numbers, there's a big gap between the level of confidence that women have in investing compared to men. If you take a look at this graph, it shows you a point that I made earlier of how important it is to have your money invested and not just sitting in cash. Let's say you had an initial investment of around $10,000. 20 years later, fully invested, you would have approximately a 7.47% return. Now, even if you miss 10 of the best days in the market, that is, your funds are kept in cash for just 10 of the best days in the market over the course of 20 years, you're already looking at a return that has decreased by more than half. It's important to also take a look at the note on the top of the graph as well, stating that 7 of those best 10 days occurred within 2 weeks of the 10 worst days. This touches more on the importance of not letting fear get in the way of investing, which we'll go into a little bit later. Here is a linear graph representation of the previous slide, which just further illustrates the gap of investment returns when you miss 10 of the best days over the course of 20 years. As a financial advisory firm, Arch Global Advisors is here to provide you with the right solutions, help you to succeed, invest, learn to manage your money, and grow your assets. So do you remember the statistics I shared about women in general, how they felt less confident than men in terms of investing? Well, it turns out that more than 1/3 of the gender gap in financial literacy is attributed to confidence, not actually a gap in knowledge. Not only is lack of confidence overpowering actual knowledge, it's also leading to less stock market participation among women, which is one of the key means to building wealth. Even despite earning higher than average investment returns compared to men, just 9% of women believe they would make better investing decisions. Through these seminars, it's my goal to help you gain more knowledge and in turn, gain more confidence in yourself, because with Arch Global Advisors by your side, helping guide you through your financial journey, there's no reason for you to not start investing today. So you might be thinking, what's the difference between Arch Global Advisors and putting cash into some online platform? It turns out that other individuals already tested that out for you, and on average, underperformed the standard index by 11%. As you can see in this graph as well, the average investor over the last 20 years has only seen returns about 2.9%, while the S&P 500 has seen returns of around 7.5%. That's a 4.6% difference. This is because markets can be complex, and they have been very volatile, especially over the last few years. And imagine if you were in a portfolio that was more diversified. By having Arch Global Advisors by your side, we can make sure that you are at least competing with these broader indexes. So what are the main concerns that can impact your investments? Taxes are always a concern, whether it be income tax, capital gains tax, but we'll discuss this in further detail in the next seminar. Inflation is an economy-wide increase in prices. For example, you can buy a soda this year for $1, and if the yearly inflation rate is 10%, next year, that same soda will cost you $1.10. That being said, if your income doesn't increase by at least the same rate of inflation, you won't be able to purchase as much soda as the year before. This means that liquid assets tend to be more vulnerable to the negative impact of inflation because cash will eventually lose value as inflation increases. Illiquid assets, on the other hand, such as stocks and bonds, have a natural defense against inflation because they appreciate in value or generate interest, helping to keep your savings safe from inflation. Last but not least, market volatility can impact your investments because it creates fear and uncertainty, which can lead to poor decision-making and can make investors hesitate to put more money in the market, meaning they miss out on those good trading days and the benefits of compounding. All of these factors that can impact investments can be navigated, and Arch Global Advisors can help you make the right investment choices. Even though there are different aspects that can impact your investment, there is another reason why investing in the market is a great option. What you're looking at here is the different sequence of return risks on a lump sum investment. So let's say here that you have a lump sum investment of $100,000. In general, you can see 3 different scenarios in the market over the course of 30 years. You can have a great start with a bad end, a bad start and a good end, and a steady average. If you take a look, the average of these sequence of returns is around 5%, meaning 5% average annual return over 30 years. As you can see illustrated in the top chart, all three sequences of return result in a $432,200 portfolio after 30 years. This demonstrates how the average return over a period of time will drive the outcome of your investments, not the sequence in which the return was experienced. What's the endpoint or overall takeaway message from this slide? That if you're involved in the market, whether it starts out bad, ends bad, or remains the same, your investment will grow just the same. With Arch Global Advisors, we will guide you through these ups and downs and make sure you're at least getting competitive average return. Not only is investing important in how it can grow your assets, but let's take a look at how beneficial it is to have more diversified investing. An effective investment strategy is one that allocates across different asset classes with the goal of maximizing return for a given risk tolerance. These charts here show two different approaches. One, you see a less diversified portfolio, and the other one is a more diversified portfolio. If you zoom in, the less diversified portfolio has 3 different asset classes compared to the more diversified, which has 8. Over the course of 20 years, from 2001 to 2020, here are the results. Not only does diversification provide better returns, but it does it with less risk. At Arch Global Advisors, we make sure that your risk is a factor in determining the right portfolio for you, and we provide you with the diversification that you need. Now let's circle back and continue to discuss the topic of women and financial education, because I believe that this is really important to emphasize. In a survey of high net worth women, 85% said they managed day-to-day expenses, but only 23% took the lead on long-term financial planning. Similarly, a study found that women and men feel equally confident in making routine financial decisions, but women feel less confident about making major financial decisions. So why is it that we see a difference in confidence between day-to-day and routine finances versus long-term planning and major decisions? Well, believe it or not, women either thought their partner knew more about the topic or even experienced discouragement from their spouse. Furthermore, women's lower confidence relates not only to their knowledge, but how knowledgeable they believe themselves to be. My hope is to give you more knowledge so that you can gain confidence and start being active in making more major financial decisions. So why is it important for women to get a financial education, be more confident, and start feeling comfortable making bigger financial decisions? There are a few main reasons that stick out. First of all, women live longer. It might not come as a surprise to anyone that people in general are living longer. But did you know that while the average man lives until the age of 76, the average woman will live to age 81? That's a 5-year difference, which will require more financial security. Women are also more likely to leave the workplace mid-career. Women in the workforce decrease mid-career from 46% at entry level to 29% at VP level, which is a 17% decrease. Of course, with less time being in the workplace and less time earning a salary, women need to be saving more and investing their assets so that they build up sufficient funds for retirement. Lastly, and as I'm sure you all know, women make less money than men. This has been an ongoing issue, and although there has been some progress in this area, women are just earning 85% of what men earn. Earning less than men makes it even more important for women to save and invest at an earlier age. On this graph, I wanted to demonstrate further and give more of a visual representation of life expectancy probabilities. As you can see, if you're 65 today, here are the probabilities of living to a specific age or beyond for women, men, and couples. Now, just at a glance, seeing that women are represented by purple and men are represented by gray, women have a higher probability in life expectancy than men from age 75 all the way up to 100 years old. Therefore, it's important to have a plan for longevity because as the average life expectancy continues to increase, you need to prepare on living possibly 30 years or more into retirement. Here you can also see the gender pay gap in the United States, which has remained relatively stable in the recent years. As you can see, looking at the median hourly earnings of US women as a percentage of men's among all workers from age 16 and up, there is a wage gap of where women earn 84% of what men earn. Interestingly enough, there is less of a disparity among workers ages 25 to 34, but there is still more or less a 10% difference in wages. Again, this just strengthens the need for women to invest their earnings early and take advantage of the returns of the market. For example, there's something called the rule of 7 in investing, which states that with an estimated annual return of 7%, your investment will double every 10 years. So just by having your money in the market, let's say you have $50,000, in 10 years, you'll have $100,000. As you can see, the earlier you start saving and investing, the more money you'll have in the future. Now, let me read you a quote. A study found that women's number one biggest financial regret is not investing more of their money. And I don't want that to be a regret for you. And that's where Arch Global Advisors can help. Now, before we get into the financial planning and strategy sector of the seminar, I wanted to review what's called the wealth cycle, because at each stage of the cycle, our risk profile is different, and so is the process by which we make decisions about money. So as we move through life and our priorities shift, it's important to understand where we are in the wealth cycle to make decisions that keep us on the right path. First is wealth creation. This is the phase where you're earning an income and creating wealth for yourself. Here, the investor's primary aim is long-term wealth accumulation, and due to their age and suitability for more high risk, long-term investments are taken. Next is wealth enhancement. This is a phase where you enhance the wealth you've created by investing and letting your assets grow. Wealth preservation. Naturally, as you allow your assets to grow, you also work to preserve that wealth and keep it invested and saved. During this phase, the investor's goals become more short-term and investments take on a lower risk. Wealth distribution. At this phase, you have reached retirement or the goal for which you have invested for, and you start to withdraw funds. The investor's risk decreases again in terms of investing. Intergenerational transfer. At this phase, investors start to think about how to share their wealth, whether it be to children, grandchildren, or to a family or charitable trust. During this time, it's crucial to understand all of the legal and financial aspects of estate planning. After going over the wealth cycle, we can now discuss what steps you can take to implement strategy. Number one, make retirement a top priority. A lot of individuals actually underestimate the power of retirement accounts. Taking advantage of retirement accounts, including any employer match programs, will help you invest early and have another bucket of income once you retire. Number two, don't just save, invest. As I discussed earlier, it's important to understand that investing works in your favor. And the sooner you invest instead of leaving your assets in cash, the more of a return you can make. Number three, team up with an advisor. Advisors are here to help you. It's understandable to not know everything, but I would like to help you financially so that you have one less thing to worry about. Number four, have a financial plan. This is the most crucial step because creating a financial plan is important to understand your finances both currently and in the long run. So, why is a financial plan important? Essentially, a financial plan incorporates all of the different aspects of your finances and puts it all together, almost like a math equation. For example, take a look here, which shows everything from your current financial position and investment planning to tax, retirement, estate, and protection planning. By adding all of these factors together, you get a financial plan. This is a laid out step-by-step guide showing you what you need to improve, how much you need to save, and it gives you an outlook on what your net worth is and what your beneficiaries will likely inherit. So what exactly are the benefits of a financial plan? Well, other than seeing all of your finances and accounts in an accessible and easy to understand guide, it'll help you manage your money and regulate your expenses and debt wisely by understanding how much you need to save per year according to your individual lifestyle. It enables you to maintain a personal goals and personal balance sheet to keep you on track and show you how to best manage and delegate any extra cash you might earn. It shows what your risk is and what investment portfolio will work best for you, given your risk tolerance and timeline for retirement. It also shows how you plan for retirement, showing you how many buckets of income you will have once you decide to retire, and how that will help you generate the income you won't be receiving through your paycheck. It makes sure that you have all of your risks covered, showing you if you need insurance or long-term care to supplement what you already have in place. Last but not least, it helps you factor in taxes according to cost basis, state, or taxes on your retirement plans so that you're aware of how much you actually have to spend. After hearing all these benefits of having a financial plan, let me discuss Arch Global Advisors' approach to wealth management and our process of putting a financial plan together. Our approach to wealth management consists of 5 steps to implement the right strategy for you. First, we engage by discussing your financial goals and needs. This is a big part of our process because we genuinely want to get to know you. Then we explore, find out what you have, what you owe, and what you spend. After we collect and decipher the data, we get information and design a plan with custom solutions for you. Now, just because we found a strategy doesn't necessarily mean our process is completed, because we have to implement that strategy by putting your financial plan into action. And most importantly, we manage and review your account annually. In most firms, there's a lack of ongoing management, but here at Arch Global Advisors, we believe that with each year, your income and your goals and your needs change. And we're here to make sure that you're taken care of year after year. So I'd like to explain further some details of wealth management and financial planning that I believe are important to understand. A lot of the time, it's a good idea to look at wealth management as goals-based, because if you have multiple goals, let's say a medium-term goal, such as purchasing a home or paying for college, in addition to a long-term goal, such as retirement, it becomes more and more challenging to achieve and save for these goals when everything is grouped together. Creating a goals-based wealth management approach can provide more clarity and control and help individuals in achieving their goals and seeing the progress along the way. One of the best things about Arch Global Advisors is that when we go through the wealth management stages with you, we'll help you determine your short-term, medium-term, and long-term goals. And better yet, help you organize a clear path to achieving those goals. Now, retirement is typically a long-term goal for a majority of people, but you can also segregate your assets during retirement into goals and their respective risk and return. So I'd like to touch base on aligning your retirement assets based on how they'll be used to support your retirement lifestyle. The basic theme of this chart is as follows. Typically, your needs can be aligned with low-risk funding sources, such as high-quality bonds and cash alternatives, or guaranteed funding sources, such as a pension plan or Social Security. As we continue up, wants aligns with having more balanced portfolio, such as a mix of equities and bonds. Last, if one of your main priorities is to leave a legacy, it's best to be most aggressive going into equities and alternatives. I'm not going to go too much further into retirement, as we're going to be discussing retirement in more detail in the next seminar, but I thought that this was a good time to go through this. So to wrap things up, once we've gone through the steps of our wealth management process, we then discuss which investment vehicles will be appropriate. Our solutions range from investment planning to estate planning and retirement. For investment planning, we offer options in equity, fixed income, real estate, and commodities. As you might know, as I mentioned earlier, people are living longer. It's no surprise now to have someone live until they're 90 years old. And that's where we step in and create a long-term retirement plan for you to prepare you and make sure that you have income for as long as you need. We help you save money on taxes. And most importantly, through asset protection and estate planning, we help to keep your assets safe and leave more money to your family, which is important to every client. Because after all, that's what we work for, to secure the financial futures of our family. So what can we do today to get started? Let's not leave anything behind. The idea is to take action today. Let's not be part of a statistic. Let's compete with men, and we can make sure where we outperform where we can. If we all do this together, we can make a difference. So start planning now. Arch Global Advisors can help you create a plan and make 2021 the year you plan to secure your financial future. So you can contact us. I'm available to talk over email or phone if you have any questions or would like to go through the financial planning process. Again, I want to thank our partners, APNA Women's Alliance, the Alliance Organization, and Nazia Hussain for having us host this event. And we look forward to continuing our relationship in the future. Stay tuned for the next upcoming seminar in November as we discuss your financial journey, taxation and retirement, how to reduce tax liability and secure your retirement. Nazia, I know as well as we finish up that you wanted to go over some questions.
Yes, thank you very much, Perez and Arch Global, for doing this. You guys gave us a wealth of information. And for the members who were not able to join, we have the recording on our YouTube channel. We have the recording on our website, on our page, and anybody can go back and view it and contact Paris and start planning your future. And I'm sure many of our members would be doing that. So Paris, we got literally a truckload of questions. So I will start with the first one. A member wanted to know, are you ever done saving?
That's a great question. It depends on a lot of factors, actually. For the most part, I'd probably say not quite, because retirement is not what it used to be. As I mentioned in the seminar, retirement nowadays can last for 30 years or more. The biggest risk that retirees face nowadays is outliving their money. Therefore, continuing to save is never really a bad option, and developing a habit for saving is your best bet rather than just aiming for a target number.
Okay, thank you. Our second question is, I don't have a lot of funds, but I still want to invest. And a bunch of these questions came from students who have saved, say, $10,000, $15,000. And they wrote to us saying that, do you think Arch Global can help us with that small amount?
That's great. It makes me happy to hear that younger kids are starting to save earlier these days. Investing is a great way to start building your assets and generating wealth for yourself, no matter how many funds you start out having. You have to start somewhere. And if you have money that you're able to put away and save, it's a good idea to invest it rather than have it sitting in cash. So yes, feel free to call out to Arch Global Advisors. You can speak with me or any of my colleagues, and we're more than happy to help you figure out the best way to invest those funds according to both your age and risk tolerance.
Excellent, thank you. Another question is, how much emergency money is needed?
That's a great question too. Of course, this also will be different for everyone. The typical amount recommended is to know how much living expense you need per month and how many months you think you'll need those living expenses for. However, it's different because because figuring out how much emergency money is needed is dependent on a lot of factors, right? So that includes your health, whatever you have in debt, if your job is stable or unstable, if you're close or far away from retirement, and if you're, let's say, the sole provider to many dependents. Overall, the funds that are saved for a financial emergency are for you. So it depends on how much you think you'll need. And, if you're ever in a position where you need financial security, how much do you think you'll actually need in order to make sure that you're secure?
Okay, thank you. And I think the people who had the emergency funds, especially the past year and the current year, the stuff that we've been dealing with, I hope, they were able to use that and continue. So Perez, the last question is, what is money management? And how do I start managing my money better? Even I would like to know that.
That is a great question again. Plain and simple, money management is a combination of investing, expense tracking, saving, budgeting, evaluating your taxes for what state you live in, income taxes, capital gains tax, evaluating where you are in retirement and estate planning, especially in terms of leaving a will. Essentially, it's how you manage your money. One of the best ways to start managing your money better is actually what we discussed today, which is going through a financial plan and creating one for yourself so that you know where you stand in terms of your finances. If this is something that you're interested in, please contact us here at Arch Global, and we're happy to get you started on something like that.
Sorry,
you're mute.
Yes, I'm sorry. I just so thank you very much, Paris. Thank you for the information and looking forward to our next webinar in November. Ali, if there is any other questions or Paris, if there's something else you want to leave us with, please feel free.
Thank you so much again for having us host this event. It was a pleasure being with you guys here today on a Sunday. If you have any questions, feel free to reach out to us at any time. We're more than happy to get you started with a financial plan or to help you invest or start saving.
Thank you, Paris, again. Thank you, Arch Global. And I'm sure you will be getting a few calls from some of the friends who I know with asking me questions, and I told them to stay tuned. So thank you very much, and I'll see you soon.
Thank you, ma'am.
Of course, thank you so much.
Thank you.
Thanks. Bye-bye.